Good morning, everybody. It's Trent Klarenbach with Klarenbach Research. Today is October the 7th, 2024, and today I want to talk about oil. And you might remember our video from maybe last week, maybe the week before, where we were bearish oil below $70, below the $70 to $72 range. And why was that range significant to us? Well, what we did is on our chart here, this is the weekly oil futures chart, and the blue line represents the anchored volume weighted average price from the April 2020 low. Now the anchored volume weighted average price represents the average price paid per oil contract since that period of time, and you can see that line and the purple 200-week moving average has acted as support. Now, once we broke that 200-week moving average, the purple one, and we broke the blue anchored volume weighted average price, we became bearish the price of oil. We were bearish below that $70 to $72 level. But of course, once we published the video, we got a nice rally in last week there with the little skirmish there within Iran and Israel. And if you're an oil producer, you certainly like this advance in the price. It's currently trading at $77, and it's really testing this this green 50-week moving average. And so we'll see what happens if sellers step in at this 50-week moving average. Often they do. We'll see what happens. The purple 200-week moving average is still overhead and rising. It's going to rise for quite some time. Now, I do anticipate that 200-week moving average to get retested at least a few times before the price resumes to the downside, but we will see what happens. The oil market is very, very difficult to trade. I stay out of it. It's just too difficult, and a lot of people I respect do also, so hence I choose that path myself. So let's look at the daily chart, and we can see here the daily chart is testing the purple 200-day moving average, which is flattening out. The light blue line here is the year-to-date anchored volume weighted average price. So that's the average price paid per contract in the 2024 calendar year, and that's aligned almost perfectly with the 200-day moving average. Each of those on their own often bring in sellers. We will see if that happens at this point too. There's a bit of previous resistance here back in August and back in May, so we'll see if we can get above these levels. I really kind of need it above 80. Probably above this high here before I can become bullish, but it's very difficult to trade. So, keep an eye on these levels. I get the feeling I can't tell if we're in a stage 3 distribution or we're just a continuation of a stage 2 markup. Maybe this is a stage 1 accumulation again. We'll see what happens. But really, the $70 level is very important to me, as is the 80. So, but when we're between those levels, it's kind of a wait and see, a neutral sentiment as we, try to make some higher highs or higher lows. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.